You're listening to the Good Question Podcast with Richard Jacobs. Our goal is to make each of our guests exclaim, that's a good question. I don't know the answer. Because when that happens, it means you, the listener, may be inspired to learn more beyond the interview and to ask great questions yourself that lead to new insights. In this podcast, we cover historical and current anthropology, comparative religion, and history. Welcome, and let's get started.
Hello, this is Richard Jacobs with the Good Question Podcast. My guest today is Reuben Mattinson. We're going to talk about exit-ready operations for a business, how proper compliance may add millions to your business valuation. So a very interesting subject. Compliance doesn't sound interesting, but adding a lot to a business valuation and exiting would be fantastic. So thanks for coming, Reuben. How you doing?
Richard, yeah, doing really well, thanks. It's a pleasure to be here.
Yeah, tell me a bit about your background. How, are you a business broker? Have you exited and sold multiple businesses? Like, how did you come to know what you know?
Yeah, I've got a pretty interesting background, to be honest, Richard, but I will keep it short as not to bore you. But I originally started off in the healthcare industry. So I was actually a physical therapist, was my first degree. So already you're thinking, how on earth are we going to get from there to tax compliance? But we will. So that was our first career. And then I actually was a science teacher and examiner up to college level for a while as well. And then I moved into starting my own e-commerce businesses online, selling product into the US. Through doing that process, I realized how difficult it was to jump through all of the different compliance tax hurdles of selling to every state in America as an online business, which you don't typically get through, being a brick and mortar store. And I spotted a niche for it really, because I wasn't getting much joy with the law firms and the accountancy firms I was speaking to. So through doing that, we started RJM Tax Exemption, my main tax consultancy business. So since then, we've worked with over 5,000 businesses. And obviously that very closely feeds into exiting, because as we'll talk about today, people will come to us to make sure all of their tax is in order before an exit, or sometimes panickingly during the process of them having an exit if they've done it a bit late on.
Yeah, what does that mean? What's one example of it done right versus done terribly wrong?
Yeah, terribly wrong is really people have just voted for ignorance is bliss, which I think we all do in some areas of our life, but not a great area to do it when it comes to your business. And then they've gone and got a great deal on kind of in principle on their business. I'm going to sell my business for $10 million. And then, of course, the dreaded audit comes, which it will, top to tail, and then their business gets looked into, and then a lot of different types of taxes are exposed which they didn't collect, or they weren't registered to, or they didn't do right, and therefore they're going to have to now pay a huge amount of money to clear that, sort it, fix it, or they're going to have to renegotiate their sweet $10 million deal down to get that person who was interested to still buy that business. But yeah, you said an option where it's done really well. Just the people who do it right, the people who little by little they do the right thing day by day, and it builds up and it adds up, and they keep a nice healthy business, kind of like as we look after ourselves as people. If we do the right things on a daily basis, eat the right things, exercise a little bit, do the right stuff, if we're doing that for our business, we're going to have a very healthy, good looking business ready to exit on.
Yeah, why would someone have a problem when they sell their business besides owing taxes on the net gain? Where would the problems come from?
Yeah, there's many different angles, as you can imagine. A big one is sales tax. So when you're selling products online, and there'll be many people listening who are involved in online sales, you have products being sold into a huge number of states across the whole of the United States. And each of these different states are going to have different reasons for you to have to be registered to them. And that's typically called nexus. So if you've got a nexus in that state, you should be registered and you should be collecting sales tax when you make sales to clients in that state. And that can be triggered by loads of stuff. It can be triggered by just your economic, volume that you're selling. It can be triggered by physically where your products are located, where your staff are located, where your offices are located. And it can be triggered by even smaller things which people miss all the time, which is where affiliates are actually based, who are referring people to your business, or where websites are owned from, who are referring people to your business, or maybe even where you've done trade shows as a business around the US. All of these things can trigger the fact that you should have been collecting a sales tax, and if you weren't, what can become very apparent is you owe a huge amount of sales tax to a handful, or in some cases a lot of states. So you've got a sales tax.
What if you sell software as a service? Like, what if I do websites for people?
Yeah, so states are becoming more and more aggressive when it comes to wanting people to collect sales tax as well for SaaS services. You're not as exposed as selling some types of services and physical products, but it's becoming more and more widespread across the states. So yes, where again, it's a good point to bring up, Richard, but where people were protected before, they're not really protected anymore. So they have to be careful of that.
Oh, so all right. So sales tax. What other type of issues would people have?
Yeah, I mean, another common one, and this is one which people don't often realize, and I think it's quite an unfair one. And when I approach this as a tax consultant, I have to tell people the black and white of it, and then people have to ultimately make their decision on, well, I need to weigh up my risk here and my risk to cost ratio. So this one is what we're talking about, state tax. So really, when you sell products and services into states across the US, there are reasons that the states, again, can make you have to register to them. Firstly, as a foreign business, out of state business, or actually to register to state tax. And again, if you sell products into the state, even if you're not located in it, most states in their rules, they actually say, well, you've got trade happening because you're selling to people in our state. So actually, if you go black and white, if you sell into all of the states, basically all of them require you to register to them. So if you're a really large company and you've been making huge volumes of sales into various states, and that happens to you, people can obviously start to get pretty worried when it comes to an exit, where they're thinking, well, is a state going to come after the entity because it's attached to the entity, not necessarily the owners per se, once they've exited and sold. So you've got to be very careful with that. The reason why people often don't register to all of those is because they're a small and medium business, and they're thinking, well, I can't afford to register to every single state and do all of the filings. And it's reasonable enough, but this is more kind of medium to big companies. They get hit by the state tax as well without realizing.
What is medium to big? Like, if you sell for above X, you're more likely to be exposed to this?
Yeah, I mean, it is about volume. It can be volume of units, which turn heads, but it can be just volume of, dollar value. You look, you've probably got to be doing well over $1 million to start to be turning heads. When I say large companies, we're probably looking at upwards of 5 million. But obviously, the higher the volume you're making, the more you're exposed, because the state can then say, well, you owe X amount of tax on that volume into our state, which is where people are weighing up that risk. Well, if we're not making too much volume of sales, why would I register to that state and pay this much money for registration and this much money for filing, when if they catch me, I'm only going to owe $50? So that's the kind of conversation that people often have with their tax advisors, with their consultants, of having to really play this game of risk, as it were. Because obviously, if they're getting caught, they're not going to get chucked in prison. It's a financial game. It's going to be how much they owe, and potentially worst case scenarios, maybe getting their business paused on being able to sign contracts and function within a state. But it is a bit of a chess game, particularly when you've got to weigh up costs that you're having to cover in your overheads that you have on a business.
I'm sure different states have different nexus triggers, but when you said $1 million, does that mean $1 million worth of stuff sold into a state, or 1 million units?
Yeah, $1 million. I was thinking, when I think of those typical businesses where you're starting to get yourself a bit more exposed now, because maybe you've sold $50,000 into a state at that point, and a state could turn around and say, you owe us 5% on that, and then another state does that, and it can accumulate quite quickly to a decent volume that you owe, because states can communicate with each other as well. So again, there's no just clear rule of it, but it's up to the person's risk appetite.
Oh, so there's like no de minimis exemption, or how does someone know to whether they should be concerned or not? Does it depend on the state? Like, are some notorious money snatchers that want every penny, or what?
Yeah, there are a few. I'm sure you can imagine the ones which are the more aggressive. So your larger populous states, so you're looking at California, are typically known to be the most aggressive, and they even we've not touched on this yet, but they enforce quite aggressively even franchise tax as well. So if you do business in their state, which they claim, again, if you just sell products to people in their state, if you store a product in their state, even more so, they will come after you and charge you like $800 minimum franchise tax a year just for doing business in their state. But yeah, state tax also, they will come after you for that as well. So yeah, there are states you're looking at, like I guess New York as well is quite notorious for that.
Are there other kinds of tax taxes that could be major problems? Or is, sales tax, again, the tax and the gain, what else could be an issue?
Well, the sales tax is the one you've got to watch out the most, because really, if you get caught and let's say you've made $100,000 of sales into California, and they're actually going to say, well, you should have been collecting sales tax on all of those sales in the region of 10%. They're going to turn around and say, well, you owe us $10,000, and actually you owe interest on that and penalties on that. Whereas if they said you turn around and owe a state tax, well, your state tax is going to be a much, much lower percentage as an out of region, out of state seller. So sales tax is the big one. But yeah, you've got to be careful, because I've touched on franchise tax. Again, Texas has franchise tax, which people typically aren't aware of. Again,
what is franchise tax? What does that mean?
It's pretty much just an additional tax for them to say that you're doing business you've crossed a threshold of being classed as doing business in our state. So it's kind of an excuse to tax people who aren't registered for state tax, as we're talking about. So it's almost like an extra step of, well, you might not be registered and paying state tax, but you're going to have to definitely pay this. And they're, I guess, a bit more aggressive on it. But yeah, you've got to watch out for those. And there's other little ones dotted around as well. B&O tax in Washington is another one of these. So it kind of, it's a very complex world, and there's just so many things that you can miss, which is why, again, getting ahead of the game, assessing these things, really looking into it early doors. It's not just going to protect your business as you grow, but it's going to make that process in the future exiting just so much easier.
Will the average business CPA know any of this, or is it so specialized that even they don't know?
That is a really great question. It's one of the best questions I've been asked on a podcast, I think, actually, because there you go. Because it hits the absolute nail on the head of why we started as a business. Because I was going to law firms and accountancy firms and CPAs and paying through the roof to have the privilege, nay, honor of speaking to them, to which they were pretty clueless on this stuff, Richard. You're right. I think this whole sales tax and, franchise tax and state by state laws for a general CPA it's kind of below their pay grade, because they want to get their hands dirty with the serious tax, right? The income tax, and they want to give you advice on that, and they want to do big audits for big businesses and big costs. So yeah, actually, this is how RJM, my business, was born, because we thought we've got a niche to have some really great specialists and professionals who don't need to be CPAs, don't need to be paid a stupid amount of money, but can actually offer a phenomenal level of service, which I think is how that's kind of landed us in the number one rating position on Trustpilot. It's that combination of the pricing and the reviews that we've had from clients. But that's why, really great bringing up, a really great point to bring up, because people will just flock to CPAs and think I have to speak to them for this type of stuff. And as I said, they'll often overpay and underdeliver.
So what would be a good illustrative example? Like maybe, I sell pin cushions, and I've been selling to 20 out of the 50 states for like the past 10 years. And now I get an offer to sell my business for like, I don't know, $5 million. How could you help me to have something left to the end of this whole thing and not get in trouble? I've never had problems before. I've never been approached by any of the states. I never collected any sales taxes or franchise or anything, but I'm in Texas again, and I sell pin cushions for 10 years. Like what would you start looking at to see if I have a problem?
Well, congratulations first for surviving 10 years in the cushion and pillow business. It's a hard one to survive. Fiercely competitive, particularly the pink ones. But yeah, basically what we would look at is, well, where have you been exposed in the past then? So we would first look at, all of the usual things. Well, where have you stored your product? Where have you been doing business? Where have you been fulfilling your orders? Where's the volume of your sales been going to? Have you had affiliates referring people to you? All that stuff. And what we would do is we'd get a general picture then of, well, how much should have we collected that we didn't in these particular states? And you've got to then make a decision, well, actually, I owe about $3,000 to California. I owe about $2,000 to Texas, whatever. And we can look at it and think, well, also what you do in these scenarios is you do VDA, so voluntary disclosure agreements to the state, if you so wish. And you say, well, look, California, tail between the legs. I'm sorry. All right. I should have done this. I should have collected it. Can you waive my, maybe some of the fees if I do this for you? And can you waive maybe the tax that I should have paid back 7 years behind the last 3 years? So maybe just do the last 3 years. And what you'll often find is the state will agree with you ahead of time and you can actually pay a lot less if you are the one who is voluntary disclosing, versus if they catch you, they're going to come down on you like a ton of bricks. Equally, if the company who's auditing you and you come to exit from this beautiful cushion business, if you get caught that way, again, they're going to think straight away, these guys aren't honest. They're not playing an honest game. So we would look at all of that kind of exposure they've had, and we'd weigh up how can we cross off this, get our business sorted. So when we presenting it with honesty and transparency, we've actually cleared any of the big issues. That would be the sales tax first. And then I guess with the state tax, again, you've got to maybe kind of think, well, what are the chances that this state is going to think that I was doing business in it, and should I do the same with them? But your biggest exposure is going to be your sales tax, potentially your franchise tax of California. So we would do it that way. And I think a lot of people would just, again, ignorance is bliss and hope they don't get caught. But generally people come out better, honesty being the best policy. People hate that phrase.
How do people get caught?
Yeah, do you know what? Another great question, because a lot of people think, well, how am I going to get caught? Yeah, like surely I'm an out-of-state seller. How are they going to track it? So they have loads of ways of tracking it. So in your Pink Pillow business, the Pink Pillow Club, you basically have been selling online and you've been using a payment processor to process your orders. And that payment processor, like, they actually submit a 1099 for you. And that actually will go to authorities and they'll be able to see the volume that you've been doing as a business. Also, state can communicate with payment processors, say California, and say, well, how many sales have they made into our state? And then when California finds out, they chat to their, neighbor down the street, and then, Nevada finds out, or another state finds out, and another state finds out. They also communicate with fulfillment centers as well, and delivery centers. If they've got, states can find out the volume that have been coming in as well through shipment. So there's loads of ways they can do it, and you'd be surprised. But again, in order of tax, which they pursue the strongest, it's always sales tax, because that is the best payoff for a state for the work that they'd have to put in to chase it up, because they're always going to be able to get the most money off you that way. And it's actually the easier one for them to track as well. So you've got to be careful. And if you've been selling across multiple platforms because you were such a successful Pink Pillow business, as we know, Richard, then you've been selling that on Amazon as well as your own website. And then Amazon actually communicate with these states as well. And so does other marketplace facilitators like Walmart and Etsy and eBay. And before you know it, you've got this cascade of you've been exposed and you've been found out quite quickly.
I mean, I don't know. I can't know nearly everything, but what percentage of businesses just never seem to hear anything or have trouble? If you down the road, they may close down, they may sell, whatever. But do they, what's the audit rate, or what's the rate of notice for these states?
Yeah, not super high, as you can imagine. I mean, I don't have the data for the clients that we've worked with to hand of the 5,000 plus and out of them who have exited or who have I guess even just been audited, yeah, not even including exits. But you get a general idea. You're looking at about 20% for sales tax, I would say, if you've been running for a good few years. Obviously, it's down to the years that you've been running, but let's say you've been running three upwards years, probably 20% ballpark. But as you've touched on, the people who've got away with it, it's when they come to the exit. As we know, no one is going to buy a business off anyone until they've done a full audit. And any company who's doing a really good audit for someone, maybe even they've got a CPA to do that, you're going to get found out at that stage in it, which I guess is why it's really important that we're talking about exits today, because that's almost impossible to avoid if you've been lucky enough to avoid it up until now with the states themselves.
So they're not necessarily going to report you, but they're going to say, hey, there's the liability. Therefore, yeah, we're going to have to withhold X amount just in case they come for us once we buy you.
Classic. Yeah. So when you once had a really good deal, it's dropped, or it's actually just made them question a lot more things because you had a voluntary chance when they asked you, is there anything you want to disclose before we do the audit? And you're like, no, actually our business is great. Then they find it out. They're second guessing you on everything now. They're thinking, well, actually, were they honest about their profit margins? Like, were they taking cash under the table? Like, what were they doing here? So again, it's building that level of trust with the person you're selling to, I think, is really important, which again is why it's better to come to someone like us and get your act together before you approach that sale, so you can kind kind of hold your head up high and think, well, I've got nothing to hide here, and I kind of know how this is going to play out.
Well, what if you say, I just sell pink pillows. I had no idea about franchise tax and, sales tax. My accountant does my stuff once a year. I have no problems. I pay my federal state. I'm not trying to be disingenuous. I just didn't know. I don't know about this stuff,
Well, I would say, Richard, the path to tax hell is paved with good intention. And I would say your intentions may have been good and pure, but ignorance isn't bliss in the business industry. And I get it wasn't deliberate, but we're now going to be really exposed, and we're going to maybe have to cough up a load of dollar out of our own pocket. So we need to now knock 5 million off the sale price. I'm sorry about that. And, you can say no, but the same thing's going to happen when someone else looks, and you don't have to go through the audit process again with another business who's going to look at you, and it's going to be awkward and slow things down for you. So just take the 5 million less price, Richard, and let's shake hands.
Well, I guess the alternative then, with your help, is it's disclosed early on. Yes, there's potential sales tax and franchise tax of these 7 states. These are the amounts we've already voluntarily disclosed to them. We've gotten answers back on 4 of the 7. We're waiting, that kind of thing. And then you shouldn't have a problem, or how would that be perceived?
Yeah, exactly. You can say, well, look, we've got proof. Here are all of our filings. Here's our correspondence with the states. You're not going to owe any sales tax, and we've disclosed all of this. And you can trust that we've made the right decision on behalf of the business there. You don't need to worry about that. You've got the trust there. The business isn't having to batter you down as much as well, because they're not worried that they're going to owe the sales tax. So there's a lot to it. And obviously the sooner you start this, the better, because we're kind of painting the picture they've waited till death's door to come to us, like we've said, is almost the worst case with us. The better case is that people come to us in the first months of their business, or even in the first year, when they're seeing that growth and their pink pillows are flying off the shelves in that first year, that they come to us and actually they never have to even do a voluntary disclosure agreement, because they were just on top of it, and they've never had to pay any fines or penalties. They've never had to pay large amounts of money to companies like us to quite urgently fix it at a higher cost than if it was just done at a slow and steady rate, looking after their business.
What about when you, here's where I have heard of tax structuring, is selling the business over 3 years. So it's an installment sale instead of, trying to net everything up front. Is there any intricacy there is that just so commonplace everyone knows about it, or is that another area which you could help?
Yeah, to be honest, it's slightly out of our area of specialism, but the tax is pretty much the same for that. You're going to be looking at a certain level of auditing on each partial exit or each partial sale. And again, similar-ish in the process, that if the business is going to be looked at that point, and when money changes hands at any time, at any reason, they're going to need to have kind of a peace of mind that the business is being run well.
Well, what if you sell to someone that is ignorant and they're not paying sales tax? Like, let's say you don't do it. You have no idea. You sell your business to somebody. It's over a 3-year term. They have no idea. So they still don't collect any sales taxes. Now, like year 2 of the sale, you're supposed to get your second big chunk. Now, a notice comes through, and whose fault is it? It's I guess both parties' fault. What happens then?
That's a really good point. Well, I mean, morally, it's the person's fault who started the business and did it wrong in the first place. But the person who has the liability and the responsibility is the person who's left in the business with, the lion's share of the company ownership. And that is a really good point, that kind of, yeah. I mean, you see it happen a lot in the business world anyway, don't you? When that responsibility just gets passed down the line, oh, it wasn't me, someone else owns it. You see that so often when someone just makes a quick company ownership switch or director switch, and that poor schmuck comes in dressed to fill the shoes and doesn't know the half of it. So yeah, that does happen as well.
So if you're going to do a large sale, I guess what would be significant? Like if your business is going to sell for 5 million or more, the business owner should definitely speak to someone like you. Or what would be the threshold?
Yeah, I think it's probably more important for the sake of sales tax, as we're saying, is the worst tax to be exposed to, is to just look at what were the highest volumes of sale that you made into any state. Because obviously you could be an online business still selling to all states, but actually, and you may have only sold 1 million in a year, year, but maybe 500,000 of that was to California because maybe they flipping loved your pink pillows in California. You can imagine they would there in California. And in that case, you might only be $1 million kind of valued business or $1 million turnover, whatever you want to value it at, but your sales have been really high in a particular state. So it's very much worth speaking to a business like ourselves to check what the situation is there and what VDA we could do for you there, if that makes sense. I mean, if you're selling across all states relatively evenly, obviously your volume would have to be higher for you to be kind of exposed to that equal level, but you want to look at the largest volume that you've done in a particular state.
What would someone, if I was looking for you, what would I call you? How do I find people like you?
So, I mean, yeah, how our business started, as I say, was I was just searching online, kind of sales tax compliant firm, sales tax help, whatever. And we were just hitting wall after wall of high level law and accountancy firms. So, I mean, businesses like ours, it's very much a niche of its own, as I say, for us to be this level of specialist at this topic, but to be charging the rates that we do. We're just very accessible online. If people wanted to find us, you just find us on a Google search on RJM Tax Exemption. People can book a free consultation with us as a business. That's not super common as well. Typically, you'll pay for your upfront consultations with other businesses, but we're starting to become a bit more common. I think people are starting to realize that, as we touched on earlier when you asked that really great question about CPAs, that they're overcharging and under delivering. So I think there is a definite a disruption in this space happening. And I'd like to say that we're the company who's heading it up, or one of them at least, who's charging the way for it. But you're going to see more of us popping up online for sure over the next few years.
Well, what if you guys went to the state of California or New York or wherever and said, hey, there's no way you're collecting 100% of this stuff. We can help to get more voluntary disclosures. No, you're not going to get everything, but in aggregate, we think we can get you more than you're getting currently now. And they'll lick their lips, hopefully, and work with you. Like, do you think you could partner actually with states?
Oh, that's interesting. I don't know what the analogous to that is. It's like, I was a bit like Darth Vader there. I was like questioning Luke there. I was a bit kind of, being pulled in. I was like, Darth, is that you? Yeah, I think obviously it would be a bit of a conflict of interest of representing client and the state. So, but yeah, if I wanted to sell my soul to California, maybe I could be on one of those Los Angeles yachts as we speak, sailing off. But I'm not planning on it anytime soon, Rich.
I mean, is it public record when states will go after companies for sales tax or franchise tax?
So yeah, they basically, they can request information. They're coming to like an accountancy firm level. They would be requesting it to the business entity, not to us. If they really pushed for it, they probably could, but it's not typical practice for them to be going to like accountancy firms to do it. They're gonna, as I say, they're gonna find you out other ways. The thing they generally try to do is build a case of evidence against you before you even realize they're doing it. So when they put it through the post, you're already caught. So like, oh, we've already caught your volume of sales and your location of your products, of your warehouses, through communicating with Amazon FBA or through your payment processor or whatever. There's no question about it. So they'll dig as much evidence as possible. And obviously, if they come to us and they're like, we're digging evidence on this person, they're going to be like, well, conflict of interest, and actually you got to speak to them directly. We could, actually in that case, they're going to be getting like a legal representative if they're going to go down that line of trying to protect themselves. But typically what businesses will do is they will disclose the information because they have to. But I'm trying to wash my hands of that again. I want to be on the, the good side, not the dark side.
No, for some actions, it's required to publish it publicly, like lawsuits, you could always look them up publicly.
Yeah.
Bankruptcy.
It would be within reason. Yeah, for sure.
I just wondered if you could do that with this kind of stuff. Notices, like ordinance violations. I wondered if this kind of stuff shows up publicly in a given state anywhere where you could use it to, you probably don't need the help, but I was just thinking.
Yeah, no, it's an interesting question. It's not something that's actually kind of fallen into our wheelhouse before per se, but I like it when I'm asked a question like that. That makes me think. So, yeah.
Last couple of questions. What would be a complete package for someone? So if someone wants to sell their business, and let's say they're going to get, just making this up, it's pretty significant, like, I don't know, 5 million, 10 million. They should obviously contact you, it sounds like, for the sales and franchise portions. And then for the structuring portions on the sale, that sounds like another tax specialty that you say you don't do as much of. But between those two kind of creatures, is there anyone else that you think should be on someone's team tax-wise? Is there yet another type of specialty that needs to be addressed?
Yeah, a chance to shout out. I won't name names per se, but yeah, you'll definitely want a representative who is going to look at the income tax side of it in more detail, the corporation tax side of it in more detail, the writing off your profits and losses, particularly when you come to the sale, the exchange of handing over the business. Yeah, there's a lot of legalities to that. So when you get into that side of it, you're going to go higher up the ladder and your cost is going to go up, but it obviously becomes probably even more important as you get into that kind of stuff with it. So you're going to need some legal, like higher level legal advice at that point to make sure that's all leveled out. And thankfully we stay one step away from that, because obviously that's a very intense world at that point. And it's kind of like who has the bigger ego, who has the bigger kind of reputation in the business, who can scare people into doing certain things or whatever, or protect businesses this way or whatever. People will, I guess, say a lot of interesting things about themselves to get them into those positions. So yeah, that will be required.
What about if I've been a fisherman or something, I get a pretty big canning operation and I'm tired, I'm old, I try to sell the business, I'm a baby boomer, I can't sell it, and I'm going to shut it down. Does shutting down a business expose me to the same potential problems as selling one?
That's a great question. Like, how are you full of these questions, Rich? Honestly, I need to come back in more often. So, yeah, actually, it can happen. It's obviously not as common, but that's we call that ghost tax. Like, that comes back to haunt you.
Kick one in the ass on the way out the door tax.
Yeah, exactly. Yeah, poor guy's worked his whole life, fished just good old honest fishing and canning and doing his thing. And California send him just one final present through the post. Look, Barry, you owe us $10,000 in sales tax and $5,000 in franchise tax. All the best on your retirement. Yeah, so it does happen. It does happen, but obviously less often, because your business activity will end. So the tracking of it and you being flagged up, and as I say, 1099s or whatever being submitted through whatever way you're processing money is going to drop off. But yeah, those tax ghosts, watch out for them as well.
Right. And then again, transfer of ownership of a business. So if I'm buying one, again, that hasn't been tax compliant in sales or franchise sense, and my advisors, I just didn't have good ones. I bought this business. Am I now likely, because of the transfer, that certain states will wake up and say, wait a minute, let's see, now there's a new owner, let's go after that. Does that happen?
I think whenever there's any update, so any document, particularly when it's digital, it's more likely to be checked. So yeah, you do need to be aware of that, and that is a really good point. And that can just be the changing of ownership. It can even be something as simple as a change of address, and it then gets reviewed. Oh, what business is this? Let's have a look. How long they've been running for? Oh, right, okay, yeah, and that can turn heads for sure.
Okay. Well, very good, Reuben. This is like a big time eye opener, this call. So what's one central place for people to follow up that are, unfortunately pooping their pants after hearing this call and need your help?
Yeah, well, I'd say come to our website if you want some, just, I guess, free guidance. You want a free consultation with us. We're not going to hard sell you anything. We just love to have a conversation with you. We'll do just a general tax compliance and health check for your business for free as well, just to give you an idea of where you stand. So you can just head over to our website at RJM, so Romeo Juliet Mike taxexemption.com. And yeah, I would love to help you if we can, and just take some of that burden off you and hopefully de-stress you a little bit as you grow and move forward in your business.
Yeah, last thing, I should have asked you earlier, but what's a story that sticks in your mind where you're like, holy cow, I'm glad I'm me and not them, even though you were able to help the person, like redacted. What's like a horrific story, a nightmare that you dealt with? Yeah,
again, not naming names, but we can talk about the story, of course. Yeah, there was a pretty successful business that was, again, I'm not going to name the specific product, selling a successful product, a different type of pillow. It was a blue pillow this time. And yeah, it was a case of which their business wasn't run very well. So their revenue kind of flow of cash was okay and their profit was all right, but they were on their kind of, I don't want to say last legs, but near to it. And I think they probably could have turned it around, but what happened is they started to get found out by the state of what they owed, and slowly but surely the amount that they were owing was building and building and building. And I think it built up to a region of around $200,000. And obviously for some businesses, they're going to think that's not a lot, but for them in that situation, it was just really sad to see, like, this is just the final nail in the coffin, and I think they could have turned it around. They had a pretty decent brand, they had a good following, but that was really sad to see. And I guess a moment where, yeah, I was glad that wasn't me. Sure.
Well, very good. Reuben, like I said, it's been great to talk to you. Thank you for doing this. And, love to talk to you again in the future.
Richard, thanks so much for having me. Thanks for all of those great questions as well. You take care and hopefully speak to you soon.
If you like this podcast, please click the link in the description to subscribe and review us on iTunes.
Thank you for listening to the Good Question Podcast. Please email support@thegoodquestionpodcast.com if you have any referrals to great guests for us to interview. Visit thegoodquestionpodcast.com to hear more interviews. And please help us spread the word by rating and reviewing us on Apple Podcasts, iTunes, Spotify, YouTube, or wherever you listen to this podcast.